Hello, and welcome to Fraud Talk, the ACFE's monthly podcast. I'm John Duffley, the Communications Manager here at the Association of Certified Fraud Examiners. In this episode, the ACFE's Chief Training Officer, John Gill, sat down with Charles Antonucci, the former president of the Park Avenue Bank who was convicted in 2015 for trying to fraudulently obtain more than $11 million from the U.S. government's Troubled Asset Relief Program. Antonucci also pleaded guilty to other charges, including self-dealing, bribery, embezzlement of bank funds, and a multi-million-dollar fraud scheme involving an insurance company. The ACFE does not compensate convicted fraudsters, but by learning what motivates fraudsters to act and understanding how they think, certified fraud examiners can be better equipped to identify potential red flags earlier and even prevent fraud from happening in the first place. We hope you will discover both in this conversation. And now, here is John Gill with Charles Antonucci.
Before you bought the Park Avenue Bank, you had a career in banking. Can you describe just briefly what your career was leading up to the taking over as the president of Park Avenue Bank?
I started out in 1971 as a management trainee for a small bank on Staten Island, New York. Spent 9 years there. Moved up to basically the number 2 position at the time. Got married, left New York, and moved up into the Adirondacks and became the executive vice president of a small bank up there. About 3 years later, I became president of the bank. Actually, it was a savings and loan association. And I spent another 9 years there. Decided to leave and get out of banking, so to speak, and went to work for a company that was owned by 54 banks that did large real estate projects in and around New York. And it was just about the time we were going through our second financial crisis here. And I became a workout specialist. Basically helped the banks resolve some of the issues with builders. I mean, there were thousands of busted projects all over New York, and many we had loans on. So I did that for 3 years. Then I was asked to take over a small bank in the Bronx, which I did. And the bank was probably the most corrupt place I ever worked. Ended up actually becoming a whistleblower. They immediately fired me. So for the first time since 1972, I was out of work. An attorney that I knew said, hey, you've got a skill, start a business. So I started a consulting business. And I did that. It sort of morphed into just doing workouts for banks to becoming a loan review system, to where I started branching out into private lending. I did a little investment banking, helping small institutions. And that's kind of how the Park Avenue Bank situation came about. I can get into that, because that's kind of the story, I guess. So I get a call from an attorney. I've worked with a lot of attorneys and accountants, do various clients, various banks. So I got a call from an attorney friend of mine who says to me, I have a client who's looking to buy a bank. He's identified this small bank in Connecticut, and he'd like you to do due diligence on it for us. I said, okay, what's the name of the bank? And he told me the name of the bank, and I said, well, tell him don't waste his time. They're going to be closed. I had good relations with regulatory agents at the time. And he said, what do you mean? I said, well, they've got serious issues, and the FDIC is going to close them in a week. So why bother, So anyway, that's what happened. So he says to me, hey, this guy would really like to meet with you. He's looking for a bank. Turned out he was a Russian guy in New York, a lawyer. We met, he told me what he was looking for. I said, okay. I had contacts, mostly among smaller banks. So I identified 2 or 3 banks for him. We settled on one, and we met with the president and sort of not came to terms, but agreed to move forward. So I said to this guy, I said, you need to get an attorney that specializes in this business. Because he said, well, I'm an attorney. I said, well, that's not going to work. So anyway, I had a relationship with a law firm in New York called Cadwalader. The managing director actually became my chairman later on. And he told us to use one of their attorneys who had been the former superintendent of banking of New York. So we met with him, And he says, there's this bank called Park Avenue Bank that needs a buyer. And so I said, what's the deal? It's owned by a Turkish national. He's in trouble over in Turkey. They've taken his passport. He can't leave the country. And the Office of Control of Currency wants him to sell the bank. They want him out. So there's an opportunity here. So we met with the then president of the bank. We drove up to Park Avenue. We met with him. Had an introductory meeting. Everything seemed okay. So we said, well, let's proceed. Let's see where this takes us. So we did a video conference with the owner of the bank. And I didn't realize that the Turkish and the Russians are not friends. Okay, so there was a little tension with this. At about the same time, the lawyer wasn't quite what he appeared to be. He claimed he had the money, really didn't have the money. He was running a loan brokerage operation, doing some pretty shady stuff. So I decided, I need to distance myself from this guy. But around the same time, Errol says, yeah, I like this guy, Charlie. I want to do a deal with him. So through a series of events, the attorney owed me some money. He wasn't paying me. I hired a lawyer, and as part of the settlement, he gave up any rights or claims he had to the bank because technically I was working for him. At that point, I'm free to negotiate a deal. Okay, and I'm a deal junkie, so it was more fun just putting this deal together. I mean, it was a complicated mess. I met with the OCC. They wanted this guy out, and if he didn't get out by a certain date, they were going to liquidate the bank. So we had a time frame to do the deal. So I started negotiating with Errol. The problem was I didn't have a buyer. Okay, so I said, well, let me see what kind of a deal I can make, and then we'll find a buyer. So he and I went back and forth for about 3 months. I went over to Turkey a couple of times. He was tough, but we finally came to terms. The guy really wasn't in much of a bargaining position, and I knew that. So we kind of worked through it. Then it became time to show me the money. Okay, so I said, okay, I got to go find the money. So through another relationship I had, this guy calls me and he says, listen, I got a friend who's an attorney, has a client, wants to get into banking. You should meet him. Meet with the attorneys. We have a very frank discussion. He said, okay, I'd like you to meet this guy tonight. Okay. So we go to, it turns out he's an Orthodox Jewish man. And we meet at the Prime Grill in Manhattan, 10 o'clock at night. Okay. So we sit down and he doesn't show up. So the attorney says, well, let's have something to eat. He will. So in walks this guy about 10:30. And he said, hi, and I understand you have a bank that I may be interested in. So I said, okay. So he says, tell me the deal. So I tell him the deal, like in 15 minutes. He said, okay. He said, are you in the deal? I said, well, I don't know. I said, I wasn't intended to be in. He said, well, I'd like you to stay in. I said, well, I don't have that kind of money. He says, well, we'll give you a piece but you got to stay in. He said, his thinking was, if it's a good enough deal, we want you to be part of it. So the whole conversation took 15 minutes. He said, okay, I'm in, and leaves. Okay. So I said to the attorney, he said, that's just the way he is. If he says he's in, he's in. So we'd worked, he and I negotiated a fee for me and the percentage of the bank, and off he goes. So we're supposed to meet at the lawyer's office the next morning to sign it up. I go to the lawyer's office. He calls me on the phone, this David, and he starts renegotiating with me. And I said, hey, and I had a little bit of a temper. So I said, listen, this is I don't have time for your crap. And this lawyer's sitting there turning white. Okay. David was a pretty wealthy guy. And pretty much got his way. Okay. So he wasn't used to getting pushed back. So he kind of backed off, and we came to terms, and the agreement was signed, and off we went. We spent another, I guess by this was the fall of 2003. We spent the rest of the time putting the deal together. We finally negotiated a deal, okay? And we go to the OCC and we say, we want to do a change of control. He said, well, it's going to take 6-8 months to do this. And I'm looking at the time, and it's past the June 30th deadline. Clearly, they just wanted to liquidate the bank. Okay. So we're kind of dead in the water. So the attorney, who was also representing Errol and the bank, calls me. He said, listen, I got an idea. I said, what? He said, what if we flip the charter from a national charter to a state charter? I said, well, we really wanted the national charter, but yeah, if that works, can you do it? Well, he's the former superintendent of banking. So we have a meeting with the state officials to discuss it, and they're more than interested because at the time everybody was switching from state to federal, so they were more than happy to get a bank into their system. So we go down and have the meeting, David, myself, and the attorney, and we're sitting there, and I knew the superintendent. So we're chatting, and he turns to David and he says, what do you know about banking? And he said, well, I use a lot of banks, He said, well, did you ever run a bank? He says, no. You ever sit on a board of a bank? No. So he says, it's going to be kind of tough, And so he turns to me and he says, Charlie, where are you in this deal? I said, well, I'm going to be sort of I'm collecting a brokerage fee, and I'll be sort of a passive owner. And he says, well, the only way I'm giving David a license is if you're running it. So I'm sitting there, and David says, okay, that's how I became president of the bank. Okay, I didn't intend to do it. I had the last time I was in banking was in the 80s, and I began to realize that I didn't work well in regulated environments. So this was going to be a little bit of a challenge for me. But, sort of my ego got in the way a little bit too, and he was offering me a lot of money and ownership in the bank. So I said, okay. I agreed to do it for 3 years. And off we went. We get close to, we're doing all the due diligence, and the states agreed to fast track it and get it through. We get to the end of May, and the Turkish government files an injunction to stop the sale. Okay, so again, we're dead in the water. So we meet with the attorneys for them, and we work out a deal. We basically said, listen, if you liquidate, you're going to get 10 cents on a dollar. If you let us buy it, your value is going to increase dramatically. Well, let me back up a second. Because of Errol's situation, they basically had a claim to his ownership shares of the bank. So to get their money, they figured liquidation was the best way to get it. And we said, no, it's not. Let us take over the bank. We can grow it and create real value here. Because he had $14 million in capital in it. There's only $25 million in assets. We were putting another $10 million into the deal. And the way we structured it was, because they wanted Errol completely out of control. They didn't want him any say, anything to do with the board, whatever. So we worked out a deal where he became the only preferred shareholder, non-voting shareholder, okay, which satisfied the state regulatory people. And we convinced the Turkish government. We said, listen, we'll give you an option. Give us an option on the shares, and you can exercise it at this price. We would exercise at this price, which made them happy. Okay, so we closed on June 30th. We closed, and I took over. David turned out to be a royal pain. I mean, he was just all over the place. He wanted pretty much to run everything. And I said, it's not going to work. I said, it really is going to work. The other thing the regulator says, you can't take any dividends out for 3 years. So I came up with a model based on what one of my clients did. I said, listen, there are other ways to make money in the bank that you can take profits. So we created a fund. We called it the Park Avenue Fund, which was basically a hard money lending operation. Okay, totally separate from the bank. Okay, funded with David's money and other investors' money. And we would do deals that the bank wouldn't qualify at the bank. Okay, basically bridge-type loans. We would do 9-month, 10-month loans. We charge 14, 50%, a couple of points. And then what would happen is we would sell the senior piece to the bank at 8%. So the bank was getting 8% and a 5% market. We had a 30% loan to value. So it's pretty safe from a regulatory point of view. And obviously that brought the funds yield up to 30%, which we could take the profits, okay? We couldn't take it out of the banks, we were taking it out that way. We got regulatory approval to do it. I don't think they quite understood what we were going to do, but they approved us doing it. And that's how we started. We grew the bank immediately from, I think the first year we went from 25 million to 100 million. And we used broker deposits as a tool. And then within the first 3 years, we were close to 400 million. I built a branch in Borough Park. I built another one in Bay Ridge, particularly catering to the Orthodox community. And we were moving along pretty well, okay, until 2008. Okay. So proverbial hit the fan. I mean, we were in the real estate business. 80% of our loans were real estate loans. Okay, either the bridge loans or loans that we made directly. The first crack was when the Wall Street firms started collapsing, and we had preferred stock in Fannie Mae at the time. When Fannie Mae failed, we lost, I think it was $5 million, which triggered another series of events. Dropped our capital ratio below 10%. And we had to be at 10% because we had broker deposits. Okay. So we're up its creek, so to speak. So we met with the regulators. We went down, we met with the superintendent. We said, listen, here's our problem. We got $200 million of broker deposits maturing over the next 3 months. My capital ratio is below 10%. I can't, I can't meet the requirement, but we'll go out of business. We'll liquidate. We need to raise $5 million to keep this thing afloat. So basically, he said to me, do whatever you got to do, but we don't want to see you fail. We've gone out of our way to put you in business, and we don't want to see you fail. So what I heard was, we don't really give a shit where you get the money, just get it, okay? So I did. We had a relationship with a customer that somebody brought to us who was pretty shady character. And we knew it. I mean, he was in the PEO business, among other things. And we'd gotten involved with him, and to a certain extent I had gotten involved with him more than I should have. Private jets, tickets to the Masters, stuff like that. So when we were trying to raise money, one day I'm saying to him, I got to raise $5 million or we're out of business. And he was using our bank. So clearly it was in his best interest to see us survive because nobody else would take his business. So he said, I'll give you the money. Problem was he's a convicted felon. Okay. So we came up with a scheme as a way to get the money into the bank. Basically using his attorney as a front. I sold a piece of my consulting business to him for $5 million. Okay. Then I invested the money. Okay. A couple things happened that I should have been paying attention to, but wasn't. But that became the first real crack, so to speak. It was about the time when the government started their TARP program. And they were encouraging banks to apply. So basically they said, you need to apply. I didn't really want to apply because I knew I had a problem, so to speak. But David didn't know it, and the attorneys didn't know it, so they applied. Okay. And I knew this was going to blow up. Okay. So we turned it down. We said, we don't want TARP. It turns out they were going to turn us down anyway. But what happens is what magazine was it? Cranes somehow finds out about this. And I become the guy who's turning down TARP. Okay. The only guy who's turning down TARP. So it's news. Okay. Next thing I'm on Fox News doing an interview, right? I did 2 or 3 different interviews. So we're trying to spin this thing, obviously. So one of the interviews I gave, the question came up, why would I turn down TARP? So I said, I don't think the government has any business being in the banking business. Let the guys fail who are going to fail. The system will suffer, but it'll recover. And I believe that. Well, the superintendent of banking calls me the next day, and he's really pissed at me. And he said, you just dissed us. I said, what are you talking about? I said, well, you were critical of us, and we did a lot for you, and we're really upset about this. So I went back and I looked at the interview, and I saw the segment. I called him back. I said, what did I say about you? He said, well, you dissed Congress, so we're the same. And I said to him, you're an idiot, and hung up. Biggest mistake of my life. They started an audit. Okay. That wasn't enough for me. So now I'm into this guy, by now, $6.5 million, because we need to put another $1.5 million up. And he starts making noise. He wants his money back. Okay. No way for me to get his money back. All right. So he comes up with another scheme. Any other time I would have seen right through it, but you sort of start to believe what you want to believe. He said, you can buy this insurance company. He had an affiliation with an insurance company. The guy is in his 80s. He wants to retire. He says, you can buy it for $37 million. So he said, but you're really just buying it, and then you're going to flip it to somebody else, and you'll pick up a $7 million fee, which just happened to be pretty close to what I owed him. Right? So I agree. And it was a fraud from day one. Okay, of course, I didn't see that, probably more because I didn't want to see it. But this attorney, who was the former lieutenant governor of Kentucky, the guy was from Kentucky, does the due diligence, said it's a good deal, we're okay. Turns out all the reports, everything were doctored. Okay. Turns out even the Oklahoma Insurance Department was in on it. Okay, that's how crazy it was. So anyway, we make the deal, and of course there is no buyer at the other end. I've talked to this guy a couple of times, but it's all bull. Now I'm saddled with this company that turns out that's worth maybe $6-7 million. Okay, but that's not the whole story. The way I financed it was also illegal. Okay? We used their reserves as leverage with Oppenheimer to borrow $30 million to buy the bank. He actually bought some of the assets back simultaneously for the other 7.5. So he got his $30 million. Okay.
You said the deal was for
$37.5 million.
It ended up not being worth that.
Wasn't worth maybe $6-7 million at that. Yeah.
But the main purpose of that was to provide some capital to put back into the bank.
Well, to pay off the guy who gave me the capital. It was a fool's errand. I mean, really. But at the time, it was a way out. For me, at least I saw it as a way out. Anyway, we got settled with the insurance company and began to realize pretty quickly that it was a pile of crap. So we tried to work through it. Of course, all the time knowing that we had purchased it illegally. Okay. Obviously, the people at Oppenheimer weren't on it too, because they knew they should have done a little of their own due diligence and knew that I couldn't do that. So about 3 months into it, we got to do something. So we met with the former owner. We had all kinds of agreements with him where he was basically, it's made it very easy to do. And he reneged on all those agreements. So now we're really, so I had to go meet with the Oklahoma Insurance Department, tell them what happened. Okay. And, ironically, they took it pretty well. Basically, they said, you got scammed. And I said, yeah, I got scammed. But I explained to them how I did it and didn't flinch. They basically said, well, see if you can find a partner and try to work through this thing. So we did. But it was, it really, it was a disability insurance company, and the connection between him and this guy were that he has PEOs. PEOs use them for the disability insurance for, there are a lot of trucking companies, stuff like that. So everybody knew what the deal was. So we basically knew we couldn't do anything with it. So I went back to the Oklahoma Insurance Department. I says, you just got to liquidate this thing. Around the same time, this was now late 2008. Okay, all this other crap is going on at the same time. I guess it's mid 2009 because I resigned in October of 2009. This examination is going on at the bank, and it's basically a very in-depth forensic. They knew something was going on. So they uncover this transaction. So this guy had an account with about $7.5 million in it. Maybe 6.5, 7. So he said, that's how I'll purchase it. So we ran the money through another company that he controlled, and that company bought an interest in Bedford through this attorney. What I should have realized, but didn't, was that he didn't take the money out. He borrowed against it. He took what we used to call a passbook loan. Okay. So basically, that passbook loan the money went to this company, to Bedford, and then back into the bank, which they called the round trip transaction. Okay. Should I have known about it? Sure. But I just didn't. And even if I did, I would have said, because I've used that same mechanism many times. Like I was involved in converting savings and loans to commercial, and we tell the depositors, borrow against the money, not realizing it's an illegal transaction because it's a loan. Technically, it's a loan, but really it's not, in my thinking. So anyway, they confront me with this in October of 2009. And I said, holy shit. I'm thinking my real issue is the insurance company, not here. So basically, I got him to pay it off, which triggered a whole nother series of events. Turns out it wasn't his money. It was investor money that was supposed to be sitting in this account. So by borrowing against it, he was able to show them the money was still there. Okay, in reality, it wasn't. Okay, because there was somebody else at the bank that was all part of this. There was sort of the guy in between him and I. So by October, I said, the chairman of the bank says, you better get a criminal attorney. You got some serious issues. So I did. I hired a criminal attorney. And thinking that the real problem was in Oklahoma. Figuring this was, a problem, but not a criminal problem. So I hired a criminal attorney out there, and we went out, we met with them, and, they're willing to work with me because they knew that this was a scam. So they didn't want it. They didn't want to be outed either. Okay. And next thing I know, my assets get frozen. I think in November, December. And then I know I got a problem at the bank, okay? But I just don't know what it is. So the attorney I hired was a pretty well-known criminal attorney in New York. And thank God I gave him a retainer before this happened. Goes down and meets with them. And basically they're saying they're not telling us much of anything. Tells them I'm willing to cooperate with whatever, right? So I don't hear anything. The bank gets sold, what's an assisted sale in March. I get arrested the next day. Publicly arrested, like all over the newspapers and everything else. And basically the headline was, banker attempts to defraud TARP, okay? Looking at it, clearly that transaction would have been a defraud of TARP. The fact that I withdrew the application, they're saying, well, you would have been turned down anyway, so you really, you know what I mean? So that's kind of what happened. And then it really became, I'm looking at 40 plus years, millions of dollars in fines. And the attorney says to me, he said, listen, he said, you can fight this if you want. He said, but you may win. I think it was a 42 count indictment. You may win on 41, but they're always going to get you on conspiracy. And they get to add everything back. So you could do 30 years in prison. Plus, you don't have the money to fight them. It's going to cost $5 million. You're going to need you're going to have a public defender. So she got to make a deal. So I did. I agreed to cooperate against this guy and anybody else that, look, I was just trying to save my ass, you know what I mean? And that's how I ended up, I was pre-trial for 5 years. I pled in October 2010. I didn't get sentenced to August 2015. And I started my sentence that November. And that's kind of the whole story. And, I'm sure I left stuff out, but,
So how long did you actually serve?
About 20 months at a prison camp in New Canaan, Pennsylvania. It's New Canaan was the name of the facility. It was Weimar, Pennsylvania. I self-reported, so.
You have to report in. Is there a certain period of time you have to?
Yeah, I still have till December. In December, once I'm up December, I'm on what's called supervisory release. I'm on what they call low intensity, which means I can pretty much travel and do everything within the United States. I just have to let them know where I am. But there were no other real restrictions because I had to start making restitution payments.
So you have a pretty large restitution. So what have they told you? How much are they?
They can take 10% of what I earn. Okay, and obviously I forfeited all my assets as part of the plea deal. So I'm paying them $143 a month. Okay, forever, I guess. And what happens each year? You have to file a financial statement with them, and then if you've made more money, you've got to report that. So far I've made nominal amounts of money, so it really hasn't been an issue. But at some point, if I make substantial money, they'll get 10% of it. It's just a fact. I got to deal with it. I don't like it, but I got to deal with it. And that's it. Can never go back. I had to agree never to go back into banking. I'm banned from banking and any public companies. There were a couple of little things that got thrown in there. So that's right.
So that's your story.
Mm-hmm.
Thank you for listening to another episode of Fraud Talk. You can find all episodes of Fraud Talk on Apple Podcasts, Spotify, or wherever you get your podcasts. I'm John Duffley, signing off.